Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at Thursday's market trade action, we're nearing Christmas. We had a mostly down day, a few exceptions in KC winter wheat and in the hog sector as well. And, really just watching some of that thin holiday trade, a few things of note. Let's talk about it. Let's bring in our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing, joining us here today. Bryan, I'll wish you a early Merry Christmas and hope you're doing well. Thanks for joining us.
Well, likewise, and thank you. And yeah, we had some movement today again in the hogs, a lot of activity there the last couple of sessions. Hogs and pigs report out tomorrow, so there's a lot on tap for the market to basically digest. But it looks like we had another week of good export sales on the hog front. And then you got this really cold, snowy winter storm that's going to limit movement and maybe weight gain. Now, not so much about hogs, I think it's cattle, but on the weight gain, but it certainly could limit some of the movement. And so that is that's out there. And then other stuff we're getting. What's the Argentine crops look like and the planting progress and such. So yeah, a lot of stuff to talk about.
Definitely. Well, I'll stay on the livestock side here. You brought up hogs, and that was probably the strongest market of the day. Wednesday was a big up day in this hog market. You brought up the cold weather and the quarterly hogs and pigs report out Friday. I wonder, as we look at hogs, is the trend still to the downside? Do we think? Is this a short term kind of pop in this market? What do you think there, Bryan?
Yeah, if you look at those back months, the winter months or the summer months, excuse me, you've got new contract highs scored again today on those contracts. Those are, I'm going to say on fire. They've had some volatility, but they punch back higher now. All of a sudden, they're 108. So the question is, is the February hog at $89? Is that overvalued or undervalued? The thing is, it's still above. It's well above the cash index. You get this big divergence between expectations for limited supply and maybe better exports and demand down the road versus nearby supplies, which are keeping the market, I'm going to say, in check. We've had a good recovery this week from $84 to $89 in hogs, but 3 weeks ago we were closer to 92. And so a lot of volatility, a lot of back and forth, but I think it's weather driven. Consumer demand. There was a report out here earlier in the week that combined dollars spent on beef, pork, and poultry will be a record high. So the consumer's still buying, but with inflation, just don't expect as much.
Well, and you mentioned as well the very strong export sales numbers for the week. China, though, not really in there. And I know there's maybe some concern about China and demand, although there's been reports out this week that they're going to be looking to try and stimulate their economy as we move into the new year, Bryan.
Yeah, so China's struggled in a lot of fronts. First, they had the lockdowns forever that really stymied their economy, and now they lifted the lockdowns in a lot of areas with the idea that, man, that we've got them to cross that threshold. Now they got COVID, rampant COVID, so struggling with that. But China's also did things like reduce bank reserves for lending, could do some stimulus. They're on the offensive to kind of jumpstart their economy, and if they do, one of the first things they'll probably look at is making sure they have enough inbound food product. And so we're kind of excited about the possibility that the hog market might have some room there. Beef for sure. The dairy market has been kind of bludgeoned or beat up on the worry that China won't be there. But we had some recovery in the front months today, and maybe that market's trying to search for a low. And this, if China looks to stimulate their economy, it might be just the thing that we need to see the dairy market get turned around.
Yeah, good point there. And staying with the dairy market real quick too. I know nearing the year end, we've had some volatility in this market, but to your point, finding a little bit of support it appears here today, headed towards the Christmas holiday, and hopefully that can maybe hold here as we get to the end of the year, Brian.
Well, the hope it can hold. The milk production report again showed an increase, and it showed more milk per cow, 17 pounds per cow, 14 or 17. The point of it is that you've got a double whammy against the dairy market here this last month with increased production due to increased numbers and increased efficiency. So the dairy farmer has done what they do best. When prices are high, they figure out how to produce more, and they've done it on they've accomplished that now on those two fronts, efficiency and in total production.
Very
Total cow
true.
numbers up a little bit. Yeah.
Yeah, very true. On the beef side, cattle trade fairly mixed. I wonder if some of that was maybe spillover support from hogs. Also, I have to think traders are keeping one eye on the cattle on feed report that's going to be out Friday afternoon, maybe squaring up positions ahead of that, Brian.
I think so, and we've talked about this for a long time that you've got a nice uptrend in cattle. New contract highs scored again this week on the let's say the February, the April, December as well. So you're just right across the board. You're seeing these futures markets continue to move higher. New contract highs in June, and the background of this will be when we look at the cattle on feed report tomorrow. We're probably going to see marketings. Up from a year ago, a little bit, but you're going to see placements and you're going to see on feed numbers lower. So again, the backward vision was pulling cattle ahead, putting them in the feedlots, had some pretty good weight gain this fall, and now those are coming out of the feedlots, and what you've got in the feedlot is a smaller number, and thus to get the strength in the back months.
I am a little surprised, and I know with the cold weather this week, that's definitely playing a role, I'm sure. But cash cattle trade has just been really slow this week. A little northern activity shown on Thursday, but the South still not a whole lot as we're talking right now. And maybe that's we're prioritizing animal health over making sales in feedlot country there, which is a good thing, Brian. But still, just interesting note there headed to Christmas how weak that cash trade's been this week.
Been a bit surprising. My guess on that is that retailers pretty much bought up 2 weeks ago or a week ago for this weekend and next weekend, and they haven't had maybe that surge at the store where they need to do last minute build up or. But this isn't unusual. That it's kind of like you think about Thanksgiving and beef prices often on the expectation of them be on the decline into Thanksgiving. We often see them on the rise into Thanksgiving because the market's already looking beyond Thanksgiving. The buyers are looking beyond. But yeah, I'm surprised the market didn't put in a little more weather premium. It certainly did put in premium from the asking price, as producers were looking for 156 to 158, and the market kind of accomplished that. But cash didn't quite follow suit, at least not yet.
Yeah, it's something to watch very closely. Overall, and this will help us segue into the grains too. I know stock market, outside market, a lot of pressure there Thursday. We got the revised GDP numbers. It seemed to show maybe a little bit more resilient economy and stoke some more worries about what the Fed could do there. That seemed to be outside of a lack of any other fresh news that I could find, Brian. That seemed to be one of the big catalysts in the grain trade being lower on the day Thursday.
Yeah, it is one of the catalysts, and it is one of those things where when we look at again, kind of this big picture perspective that we have, it's just a problematic market in that it's like corn. It wants to go up, but then it runs out of gas, and when it does, it runs out kind of hard. So outside markets, boy, an enigma. Will probably show some of the biggest losses, as we close out the year, maybe ever for a year. In tech stocks, things like that. Expectations are that another half point rise in rates is anticipated in January or into the new year. I'm not sure when they meet. Will it be more? Probably not. But I think the idea that maybe going into January expecting 0.25% or maybe no percent, I think that's behind the market after today.
Yeah, I would agree with you there. It just feels like, overall, that's, finding that as our quote unquote news of the day as was basically the move because, we're in that thin holiday trading time period, Brian, where just at low volume and sometimes you got to take some of the moves with a grain of salt, I would think.
Yeah, that's typically the case, and yesterday we saw this big jump in the wheat prices, and then today we're off. So that's indicative of maybe holiday type trade, lighter volume, some short covering. You ran through some moving averages, and corn popped it up yesterday. But I don't want to read too much into those weeds. As we kind of step back and look at all of these markets, we continue to see that as interest rates have risen since June, the combined net long of fund money of agriculture commodities has continued to decline. So it's really about a money shift out of the commodities. And, the question is whether that continues or this is just kind of a healthy correction where the money maybe went in equities for a while and now maybe comes back to commodities. Only time will tell. There sure is a lot of stuff on the world front between Ukraine, Russia, China, just about name it. And there's something there that bears watching. And right now, the biggest will be the southern hemisphere weather. Argentina got some rain. A lot of reports said, well, not nearly enough to do much good. Yet the crowd that says, hey, La Nina is on the decline seems to be beating the drums a little larger, and that we're seeing weather patterns change. So the next several weeks will be exciting, maybe critical.
Bryan Doherty, Senior Market Advisor, Total Farm Marketing, is our guest here today on the show. Bryan, you brought up some of those things there with South American weather and some of the world items that are out there, the trade. And, as we look at these markets, we're getting close to wrapping up the year. We're looking ahead to 2023. As we kind of think about that crystal ball, I first want to just start and say, as you look back at 2022, what are some things in your eyes that maybe farmers and ranchers should have learned from the markets this year to maybe help them prepare and think about their risk management moving forward? What are some things they should have maybe learned from this year or taken away possibly?
Yeah, it's a good point, and I think what and it's always a challenge, but when you have markets that are moving upward, and common sense kind of kicks in. Well, can we sustain demand at $7 corn or 7.50 corn? That's history says no. So when we get up in those levels, make sure that you're continuing to reward the market and keeping that pay raise. Also, look at using other tools. Look at the put options. I want to echo back what we saw in June when the corn market decided to tip over right toward the end of June, around the 21st, 22nd. The market lost nearly $2, lost $1.85 in a 3-week window. That's just devastating. Luckily, the market came back. But if you were light on sales and didn't want to make sales because, well, you're waiting for $8 on new crop, recognize just how fast the market can take those opportunities away. And then the old saying is nobody ever went broke selling rallies, or I should say rallies, but selling gains. But human fear often says, if I sold and now markets are higher, I don't want to make that same mistake. So maybe we don't add to it, or maybe we add 1 time or 2 times, and when you should keep selling more and more quantity, you have a tendency to shy away. You learn to use the marketing tools in that case.
Well, looking ahead to 2023, I know you mentioned a few of the things that are on our minds here: South America weather, the Black Sea issues, China, logistics, supply chains, the cost of planting this upcoming crop, being probably the highest ever. As you think about that, any thoughts, tips, recommendations you have for farmers here the final week or so of the year, looking into next year, that they just need to maybe keep in mind here as we move forward, Bryan?
Yeah, I think to keep in mind is when you see the board price of $6 corn and $14 beans, what that ultimately could look like down the road. Could be more. So where do you start? Where do you not start? I mean, you can't afford not to start. So I'm just a little bit concerned that the marketplace is going to run out of rationale to move higher. So it's not that I'm bearish, but what I'm seeing is markets that can't sustain rallies. So as we look ahead, really keep kind of a sharp pencil handy to make, if it's incremental sales for you that work, or if it's big sales at a price, but keep those orders floating out there. In order to sustain, I've used that word a lot, a bull market, you need a lot of variables that need to be, continually sort of pancaked on each other, and those are pretty rare events historically. So, sell rallies is the point, defend higher prices, and go about your work of producing the best crop you can.
Definitely. And the old saying goes, you got to feed that bull with something. Bryan, if folks want to reach out to you there at Total Farm Marketing as they're wrapping up the year, entering a new year, want to get some advice on their marketing plans, what's the best way to reach you, Bryan?
The best way is a phone call, and our number is 800-334-9779. And then what I would tell you is to look at our website, totalfarmmarketing.com, and you can find a way to connect with us there. Or if you want to shoot me an email, it's Bryan with a Y, Bryan@totalfarmmarketing.com.
TotalFarmMarketing.com is a great way to get in touch with them, and all the info is there as well. And with that, Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Always a pleasure, sir. Merry Christmas. Happy New Year. We'll talk to you in the new year ahead. Thanks so much for the time.
Absolutely. Thank you.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.